Okay, so now we're going to actually look at this optimized max fund again a little bit more in depth since it is a little bit different than all of the other ones. So the MEC limit being 43,464, we're putting in 43,400 into this policy per year, and you can see that's what happens over time. This one, because of the way that this is optimized, this is a year 3 break even. So it is breaking even faster. If we go back over to this optimized 25K fund, these are the same crediting rates, not guaranteed crediting rates, but this is based on the same crediting rates. It's not a year 3 break even in the 25K fund, but because we're getting into that max term blend on this policy, we can see that this would be a year 3 break even. So that's pretty good. And all the while, you still have access to take loans. So you can take loans against your policy and use the index loan feature in this, where you pay 5%, but you might be getting credited 6, 7, 8, 9. Some years can be 20, 30% based on these indexing strategies. I've got other videos that are walking through the indexing strategies for this carrier. So check those out in the Net Wealth Finance playlist and a number of different playlists, but we're not going to dig too much into that right now. So we've looked at, okay, this breaks even quickly, and we're funding this at a very high funding level. But over time, this really does grow that cash value very quickly because it's very streamlined. So when we spot check, again, we're looking at year 10. We can see we've put in 434,000 in this policy, so it's higher than those previous funding levels, but we've got 573,000 in cash value. And let's spot check year 20. We've put in 868,000, so a higher funding level. We've got 1.725 million in cash value at year 20. And let's go to year where we stop funding, age 71, year 46 in this policy. We have put in 1.96 million in premiums, but we have 12,741,000 in cash value and 14,600,000 in death benefit. So numbers are pretty crazy. And jumping down to in this max fund, max blend policy, we at age 90 will have put in 1.96,400,000 in to premiums in this policy, and we'll have access to around 44 million in cash value to take loans against to build our portfolio. Maybe I mean, at age 90, you might have stopped doing all of that actual active management. Maybe you've handed off some of that to your kids. But in this case, we've got a significantly higher amount of cash value than the lower funding level at 25K, even the optimized one. And we've got significantly higher in death benefit. So all that's really to just show that the power of compound interest is really highlighted in this. These policies, when you get one, or if you get one, you could do better. You might do worse. I think you'll do better, in all honesty, just based on historical performance. It's quite likely that you'll do better than what's shown in these policies. So I hope you were able to learn something in this. I am a numbers guy, a data guy. I do data analytics, big data stuff. I love crunching numbers and seeing how compound interest does its work. If there's things that you're interested in seeing broken down, different types of comparisons, drop a comment below. I'd love to have your ideas or for what you want to see in some of these videos, what kind of angles you'd like to see on these different IULs or whole life policies that are designed for cash value growth. Again, this is a tool that we use to build further wealth outside of the policies. I do that with both my whole life and my IUL policies, and that's why we call it net wealth finance. We're using this to finance growth elsewhere in our life and to have generational wealth that we're going to be able to pass to our beneficiaries at the same time. If you're interested in working with us to get a policy, there's a link in the video description. We can walk you through different policy designs. Really, all of this was for an example. If you're knowing your situation, how much you might be able to fund, what your health situation is, how old you are, all of these things are other factors. If you want to see videos on other age groups and risk classes, then we can do that as well. Right now, Allianz is doing an automatic upgrade to the top health rating if you get standard or higher. So it's a fantastic opportunity if your health is just okay to get the top health rating. It's just because, I think the interest rate environment is good. There's a number of factors that are making it so that Allianz is doing well. you want to look at that, we can get you some illustrations. We can look at your situation and get you an optimized design based on the exact funding level and your situation. This video is part of a series. Check out the playlist here. If you want to learn more broadly about net wealth finance as a strategy and whether it makes sense for you, check out this playlist. If you're already ready to book a meeting, then check the video description. We could work with you to determine whether or not this makes sense for you to employ in your life. Thanks for watching. We'll catch you in the next one.